Hello, everyone. My name is Spencer Logan, and I'm excited to bring you Harbor Capital Advisors' May edition of our monthly video newsletter. On the heel of April's Financial Literacy Month here at Harbor, we like to bolster our clients' financial literacy by focusing on a particularly hot topic right now: inflation. Now, in the wake of rising inflation and geopolitical instability, we realize that market conditions have left many investors asking, what has changed? While we know current events are not easy to watch, it's important to recognize that there are ways to help hedge against inflation in today's volatile market. Historically, one of the best ways to hedge against inflation is by investing in commodities. Commodities are a broad but distinguishable asset class with returns that are largely independent of stock and bond returns. They include precious metals such as gold and silver, industrial metals like copper, zinc, and aluminum, oil and natural gas, livestock, and food-based commodities like grains, coffees, and sugar. Adding commodity exposure can help diversify an existing portfolio of stocks and bonds, and potentially lower the risk of a portfolio while boosting return potential, particularly during times of rising inflation. You see, commodities and inflation have a very special relationship, where the influx in the price of commodities can often be an indicator of inflation to come. As the price of commodities rise, so does the price of the products that the commodities use to produce. Because commodity prices typically rise when inflation is accelerating, they may offer a hedge from the effects of inflation. As inflation recently hit a 40-year high, fortunately, it is possible to broadly invest in commodities via exchange-traded funds, also known as ETFs. Harbor's all-weather inflation-focused ETF, Hedger, HGER, is a commodity ETF that seeks to help address rising inflation, and it can help serve as an effective hedging tool. What makes Hedger stand out as an inflation hedge is its distinct design, which was specifically engineered to help hedge inflation using commodities. So why take advantage of commodities right now? Over the last 3 decades, commodities had a statistically significant and largely consistent positive inflation beta, or predicted reaction to a unit of inflation. Of course, rising inflation can erode a portfolio's purchasing power, which can be a challenge for investors with shorter investment horizons, such as retirees. Well, that's all for Harbor Capital's tips on leveraging commodities as an inflation hedge. Until next time, this is Spencer Logan wishing you a very happy spring, and please contact us at 1-866-313-5549 or visit our website at www.harborcapital.com/ETFs to learn how we can help make the most of your investments.